Hello, everyone. Mike Arnold here, co-founder Path Trading Partners, along with Bob Biacchino. How is everyone doing today? Happy Sunday. Sorry about the glare on the side of my head. Still working on the new lighting issues and sound with the new. Well, I repurposed another microphone to try to get a little better sound going. So, and we have the green screen now, but it's giving me a little glare. So we'll keep working on that. By the way, if you're new here and like the content, please do consider subscribing, ringing the bell, and hitting the like button. All right, so let's see what is going on. We're going to do the market overview. Remember, Fed week on Wednesday. So it's actually Fed week because we'll have some possibly lower volatility going into the Fed meeting, and then we'll see what happens. We have had just a major sell-off in the broad markets for the last week. You can see here. Let me switch cameras here. There we go. You can see the big down week. I mean, breaking below a lot of key support, getting nearly into oversold on a weekly basis, coming down, nearing major weekly support with the S&P, and we'll take a look at all the indices here. But I also recorded just a little bit ago before I went live the Etf Sector review, so you can view that after you watch this, and that will give you a broad overview of the different market sectors and what we think. There is not a lot of potential bullish moves besides short-term bounces. Short-term, we're again getting very oversold. Here's the weekly, there's the daily, very oversold. You see this blistering sell-off to the downside. In the S&P breaking a major trend line, even closing below the 200-day simple moving average. I am watching for a bounce to come in, but again, bounces, at least in these market conditions, are to be sold once they get into key resistance levels. Hey, Amit, how are you doing? Yeah, I'm doing my green screen stuff now, so I'm glad you are here to join us. So let me know also how the sound is, because I'm experimenting with some new setups for everyone. And these are the kind of things when I get donations. By the way, we have links to buy me a coffee, Patreon, or you can just super chat if you find this stuff helpful. I like to do this channel based off a lot of just donations for people from all different levels and walks of life, and beginner, advanced. By the way, earlier today I did record a video on option gamma from a market maker and dealer perspective, from hedging and going in and how it affects a market participant like you on expiration, like monthly expirations. Overall, the content is not just for expiration, it's to help you understand a dealer and market maker hedging and how then it can play into volatility on, especially around expiration. So please do check that out. Even if you're more towards the beginner side, you can get at least exposure to some stuff you may not have heard about, and you can always go back and watch it multiple times. All right. Oh, thank you, Amit. Thanks. Watch both of them in the ETF review. It's really, I'm trying to get more and more stuff on this channel to help people. With these challenging times and challenging market conditions, you just can't count on the market just day after day going up. And I'm expecting longer term, day after day, a much bigger correction. You'll gather that from that sector review. So we are watching for bounces, though, coming in, again, deeply oversold, coming back through a key harmonic and back to that 20 or the 200 simple, but going to start watching for potential plays to the upside here in the coming weekend, expecting possibly a 3 to 5 day overall rally in the markets with the Fed meeting this week to take us back again to key resistance rollover levels. My line in the sand is about 44.37 going into tonight and tomorrow with the S&P. Is an aggressive buy. That just happens to be, that was based off the 1 hour. Aggressive 4 hour buy signal on a close A 4-hour close above about 44.39.25. Why it's so aggressive? It's into the 4-hour rotation zone, so it could rotate again lower here. I'm more expecting it to test some. We'll get some running into some key resistance areas and pullbacks, but then I'm expecting some higher prices, especially into some aspects of the weekly rotation zone. But overall, then, for example, we now have this major support level becoming resistance of 4,500, 4,509, even up to 4,530 area. There's 45.36. There's a major resistance window with your declining rotation zone. So that's where I am watching for the bounce and then another longer term rollover move. So if you're playing any bounces, you're going to have to be very aggressive, taking some profits and getting your stops to especially break even, because we can't time the exact rollover. And don't try to front run these. That's why I still have a bullish line in the sand. That's why I'm just not, oh, let's just willy-nilly buy. Let's just buy. You need something to get beyond, needs to show it can sustain a move. And the first sustainable move is above this little support shelf on Friday that we tested, then finally broke down. So that's what's key. It's not just, it's the market's still got to prove itself. Could it head lower? Yeah, it could easily head lower. What are the next levels of support? My next major levels of support are at 43.45 and then 43.27. We start breaking below 43.27. Not looking good, especially that's where the flat 50-week exponential is. We have a prior area, even to 42.56 to about that 43.27, but below 42.56, bon voyage. I'm not expecting that this week unless we get some news out, especially from the Fed, that really shocks the market, like they're just finishing their QE abruptly and like, oh, they're targeting like 50 basis point hike in March. That could probably shock the market a bit. But once we take out these levels after a bounce, then watching for a continued bearish pullback. Let's see what else we have here. So given the recent drop in SPX, clear path target to 43.27. We can look at the SPX. The cash, we're still about 43. Clear path moved to about 43, opening here about 43.48. And again, I'd expect that we could actually continue if we have bearish mode. That's your next targets on the SPX for Monday and Tuesday. If we don't hit that and bounce, that would be my next major targets after, or minor targets after a rollover. Let's see, we're 40. And based off the daily, that was a weekly chart. Your daily clear path targets would be to 43.58. Okay, Benjamin. Hi, I think the market is going to go down, but interesting, back in January 2000, market top to decline was 8.3. We're currently at 8.6. I'm expecting a bounce this week, as I said. And then a longer term decline. So that could be in line with what I'm expecting. We bounced over 5,100 by March 2000 and plunged 80% over 2 years. And I'm expecting another pretty big move after a bounce. We'll have to see how sustainable this bounce is. I'm going to be watching the daily rotation zones. Possibly a big bounce. It could be a little bigger than people predict, nowhere near new highs. And I'm just going to be, again, watch the daily rotation zone and for potential rotations. For example, the NASDAQ daily rotation zone, you could easily return to this 15,150 area. 15,150. So is that a big bounce? And then you get through there, you could go and prior kiss this trend line goodbye. Even 15,500 could be a target on a bigger bounce. And that would just be returning to this key support area becoming resistance. So that, again, we're just going to have to see what the Fed says and how much momentum it gets the upside. But I'm watching for that bigger rollover again. Can I predict how big the bounce is? It's going to depend on what kind of momentum it generates on the long side once a move gets going. That's going to be one of my gauges. So you'll have to stick tuned to the market overviews. The Fed is going to crash the market. Rich, you're even more pessimistic than I am. The Fed is going to do major damage long term, I think, to the market, but they have to. They're in a corner with inflation. They put themselves in this corner. I feel no sympathy for the Fed. They ran things way too hot, way too long. And now they're painted into a corner. And if they start cutting too early, inflation will spike back up. And that hurts more and more people. And it's not just our Fed. I mean, you look at the inflation numbers that were printed in Germany. Holy smokes. There's going to have to be some getting excess money out of the system, and I think it will. Longer term cause a major slowdown. Things were already slowing down with the consumer in retail, and retail makes up about, the consumer and consumption makes up about, 70% of just GDP. So you already have headwinds coming from the consumer. Again, not to keep plugging it, but take a look at the Etf Sector review after you're done watching this. You see consumer discretionary sector just getting destroyed. Staples could pull back a bit, but then staples are in bullish mode. Let's see. When you see overextension down or up on the daily period away from the 8 or 21s, you usually expect a reversion, then a continuation of trend. In this case, yes, longer term, I expected a continuation of trend, and right now the trend is down. You can see here I've been on the NASDAQ. We've broken well below the weekly rotation zone. The weekly rotation zone is not yet technically in bearish mode. I'm in bearish mode on it. I'm just watching for bounces up to this. See, even we talked about those levels, even this 15,500, that just returns to the weekly rotation zone, and then we watch for a rotation over. And here's how much damage you did on the NASDAQ this week. Not you, but the market. Look, we closed into this. We ignored the wicks for clear path moves. We're into this longer clear path move. This, we're closing below the 50 week. Back to the daily, we're well below the 200. So that's a key area of resistance also. Just returning that 200. So you could get a decent bounce, but these bounces are not to be, okay, I'm going in long term and I can just sit and ride it. These bounces are literally bounces to reposition portfolios, to, if you didn't take stops and already, maybe get out of some positions that are weaker on the bounce and go into a more bearish oriented portfolio. Longer term, we're bullish on commodities and energy. They're ripe for a slight pullback, and I could see getting a pullback in commodities if you get the nice bounce in the market, and then reload with even more commodities. Bullish line in the sand for NASDAQ tonight, overnight, and tomorrow is about 46.16, 46.20 area. And again, that would be an aggressive bullish stance watching for a bounce play. If we continue lower, I do have some support right below this. So even if we test a little lower in the overnight sessions, 1436.65 to about 14,390. Below that, my next major level is not down till about 14,143 to about 14,072. Boy, and that would do some significant damage to things. There's, again, aggressive buy above Friday's high on a closing basis, but that would just be a rally into the daily rotation zone. So anybody in those against the rotation zone are lower probability buys. I will just list them off because they are technically buy patterns. And as I stated, you have the 200, you have the 8 EMA, which is the lower aspect of the rotation zone. You have the 21, the upside. And even if you just ignore that, even if you're just looking at price action, okay, you have some key, besides the moving averages I just listed, this low is not going to be ignored. Even though we look at closes more, I'm not going to ignore this low on any bounce. 15,150 area. Then above that, you're 15,480. Above that, 15,500. Then above that, 15,600 are all your key major resistance. You can even watch minor coming in about 14,900. just above Friday's high. That's this prior little support, which didn't hold as well, but it can turn into a little minor resistance. Let's see here. Let's see. Yeah, mean reverse. I think Monday is a continuation of Friday, then maybe a bounce. And that's why I'm not just going to, hey, let's just buy. I need to, again, with those bullish lines of the sand, I'm watching for bottoming patterns. I'm watching for some momentum to the upside. And I'm not interested in just trying to pick a bottom in this kind of falling market. I need it to actually start to prove itself. And then it's a very aggressive bounce. Not aggressive in times we're going to new highs, but aggressive in you have to move up your stops. I'm going to keep saying that. I can actually see it going through all just because everyone is bailing out. I'd be really shocked. There's a over 50% based off one of the things I follow, over 50% probability that market highs have been potentially put in for this year. It's not anywhere close to 100%, but it's you have slightly over 50% probability that the highs have been put in this year. And it's got some major work to do. Now, stuff is very oversold, so bounce is in order. But for it to, especially into a tightening cycle and more unwinding of QE, we'll have to see. It would take some major heavy lifting by the markets to get to new all-time highs. When we find price action moving fast in a clear path move, what takes priority or increased probability, mean reversion or a completion of the clear path? I start watching for a completion of the clear path move on a daily time frame. Weekly is a bigger thing. You could have bounces before you get to the weekly. But daily, I watch for completions and harmonics, and then I watch for bottoming patterns. Now, if you get a major bottoming pattern, like a great double bottom pattern before then I will take a double bottom pattern. Hey, Dan Jet, welcome, welcome, welcome. Gap fill on what, Rich? There's your NASDAQ. Here's your Dow. Again, Dow's broke a very key trend line, the 200 simple. We had major support here, just sliced through it. Just hit this 34,100 harmonic. Next level's down for the Dow. I'm going to bump this down a little. Oops. About 34,000. If you break below 34,107, especially overnight tonight, 34,000, then 33,804, then 33,725. To the upside, my bullish line, I'm going to start watching above about 34,450. That's where I'll start watching for some potential bullish moves. But just because I start watching there, the next, just overhead on all the markets I've already covered, there is key resistance. So this would be starting to get bullish. This would be getting more and more bullish if it can sustain above that level. To the upside, well, here's your 4-hour Dows. You see here with the rotation zone, you're at least in the rotation zone to kiss the trend line goodbye, which would be about 34,950 area. Above that, watching about 35,150. And this isn't just for tomorrow, but your rotation zone goes all the way up to 35,575 area as of the time of this recording. It will continue to drop. But you could, again, have a rally back up to there. You have a little prior support becoming resistance, declining rotation zone, and then a strong rotation back over. Major line in the sand, though, for the Dow is you start breaking, you see here closing right at this key level here. You start breaking, though, below about 34,000. I'm getting into really bearish mode on the Dow then. Very good. No, poaching's oversold on the weekly. Daily is very oversold. And remember, just because things are oversold does not mean they have to bounce. That's why you just don't be a blind buyer and say, oh, we're oversold, let me buy. Things can get more and more oversold. Just as before on the run-ups, they could get more and more overbought. As you see here, overbought, more overbought, more overbought, more overbought. Quick little dip, then more overbought, more overbought, more overbought. The same thing can happen on the downside with oversold. Peeking at the Russell real quick. Russell did major damage last week. Here's the weekly. See here, breaking through this. This is actually a weekly shake and bake pattern confirmed this week. Still watching for a bounce in the Russell also, just like the other things. But overall, then, Russell is very weak. You start getting a close below about 193.40, you're into a clear path move, and I start watching for targets, especially down towards the 200-week moving average. On a bounce, I'll be watching. Minor will be 2005 area. More significant is a 2060, and then above there I'm watching the rotation zone, with the minor being then 2084 and major coming up around 2125, because this will continue to drop. So again, bounce and then roll over. All right, what else we have? NASDAQ, which gap fill? You mean we've already filled this? I don't have on, at least on the futures. I mean, on the I don't have, which gap fill are you talking to the downside? The downside in the Qs, you have a gap fill down to about 347.60 area. And there aren't some major gaps here. So in the Qs, that'd be the gap fill that I'd watch on the Qs. I'm not seeing which one you're talking about, Rich. I mean, we don't, even on the Qs, let's see. Maybe I missed it on the Qs. This has already been filled. This has been filled. So there's not a lot of gaps. The only partial fill one is up here. Can you give examples of short-term bottoming patterns, what you look for on 30 minutes, 4 hour? I don't want to get into that level of detail. Key, if you watch my broadcast, I really watch for double bottoms, or I watch for multiple divergence and then momentum off a divergence bottom. And there are some other plays I will watch for with not on 30-minute, but the 1 hour and 4 hour with a percent B signals, which are based off Bollinger Bands. I know I had a request in Discord, by the way, if you would like to be in a community, very inexpensive to join. And it's only a one-time fee. It's like $10. You can join our Discord server where there's lots of great conversations going on. Got a request on there for Facebook. Facebook really breaking down, closing below this key support. Your next levels on Facebook are about 299.50 to 390. But below that, you start getting below that. My next major targets are 290 and then 278 area. Again, if the market does rally, especially in NASDAQ, watching for a bounce, but your key resistance on NASDAQ is now 3. Minor will be here, right around the 317 area, but more significant is this 323 area. So you had this big support channel broken down, retest, and then falling out of bed. So that's your key resistance area. And then if it did get above there, I'm bearish on Facebook now if it was not able to hold this level. So I will watch for a longer term rollover play. If it did get above 323 area, my next key resistance would be 335. But this just leads me into the fact that, again, Facebook's now shifted to bearish on the weekly. It actually shifted a few weeks ago, and we're getting below here. Again, with the bounce, once we get really below this 300 level, then I aggressively get bearish on Facebook. Yeah, we already did the S&P first, the ES. So please watch the recap when it gets posted shortly after the live stream ends. I don't want to recover that. 14K is critical support for NASDAQ. And we have a harmonic right there. And yes, it's this prior level. It's this prior right here. I have that comes in about 14,029, so roughly 14,000. You get through there though, you go down the end of the clear path, and you start to have more unraveling. Let's just see where we sit with retracements from the March 2020 lows. My major levels, I could actually see this longer term easily trading back to the 50% level overall. Not in the short term, like I mean in the next couple of weeks. I mean in the longer term as things continue multi-wave patterns down. What else? Just take a look at a couple commodities because I'm really bullish on commodities, but the but is I'm watching for pullbacks. We had crude. Here's your daily. Had a little double top pattern running down, almost hitting the full final target and then bouncing. I'm still watching for a slightly bigger pullback in crude, but as I said with the ETF, the energy ETF, there would be on a rotation back up and a key close, which I listed in that video. There would be a half position add if you're trading around a core position, and then a full position add on a further pullback. Gold got some selling coming in. Overall, longer term, I'm still very bullish on gold. But if you get a rally in the markets, I think gold will get sold back down. We're still not at key breakout. Remember, we're in the major, even with these power moves up like you saw on the 19th, you're still in a huge congestion / consolidation channel. Silver coming up to the 200 and bouncing off. It's actually a nice little short-term play if you get another close back above about 24.80 with a potential play up to the mid 25 area. Just recapping for 10-year notes, that's the key thing to watch. We had this double, or sorry, it wasn't double bottom. It was a inverse head and shoulders coming up, hitting the full target, and then just closing back below that. So we already came to completion on that. Let's take a look at that daily. Into the rotation zone. If the rally continues, my next major area of resistance is 128.27 to target, and then above there on a weekly time frame, I'd be watching about 129.15 area if we continued. We potentially put in at least a short-term bottom for a continued rally. So any rollover plays would be only partial positions until it got back to a bigger weekly sell signal. And that's on the bonds. For the yield, you can see here coming up, we had 188 as the harmonic level. Could not get a close above that. Pulling back to the daily rotation zone, but you can see the yield, even major support area for the yield is, oops, I forgot to take off my Dow tag. Major support is between about 170 yield and 165.5. So that's a major support level. I'm watching for a longer term pullback on the yield. So that's what I have today. Let's see. The NASDAQ move from COVID to now is crazy. It looks like a rocket. Yeah, that's why, again, a lot of it has to be unwound. Let's just take a glance at the dollar index. Dollar index, really interesting. Pulling back to the weekly rotation zone. I'm going to see if we can get a sustainable rotation back up. If you get below that weekly rotation zone, then a short-term top is in for the dollar, but that would need a close back below about 94.82 area. Then I'd start watching for a substantially bigger pullback on the dollar. If it continues higher, it actually closed just into this prior resistance becoming support after testing the 95.89. I won't get bullish on the dollar until we can really get a key daily close back above about 95.90. All right. That's what I'm seeing. Let's just go ahead and check in on a couple other stocks real quick. By the way, Apple on a weekly basis closed with a double top pattern. First level support is 160. Even with a bounce, And if we get that tech bounce, we could easily get back to this prior about 167.50, 168 area with the declining rotation zone. So back up in that area with a strong rollover would be another shorting opportunity, or something like with a put spread for a longer term correction in Apple. You can see the weekly rotation zones back at that 160. Then if it pulled back beyond there, we have these two lower targets. But these are areas especially watch for bottoming patterns. The earnings for Apple coming in on the 27th. Mike, searching for a floor in the NAS to play the downside longer term. Can you draw the long-term trend line using IXIC? You want the longer-term trend line from 2009. I mean, the longer-term trend line would be you'd have this one. That would be the first longer term, which is way lower. And then I'll draw them. These are cascading. If you want to know how we draw trend lines, well, I have a series of videos. They might be, I think they're labeled with how we draw trend lines for crypto. It doesn't matter. It's how we draw trend lines, period. Now we're going to have another one. This is where we get cascading trend lines. So there's your three major ones lower. And then, I mean, you just have this on the terror since the lows in March of 20. And then the next trend line, which has already been broken, oops, was this. This was technically the next trend line, which so that's a key resistance point right there. So keep that in mind. But you, this, to return to your longer term trend lines, especially some in here, you could, and I'm not expecting this yet, but that's comes in at 8,400. We just don't have any great trend line. We might get a new defining point here, or if we get a big reversal week right down here. But again, longer term, you don't have a lot of great support points. That's the problem with this market. It's gone so far so fast. Mega caps reporting this week. Yes, there are a lot of key reports. And actually, I forgot to put that up. Let me see here. Thanks for reminding me. Here you go. We have to do this and news. Sorry, I forgot about that. Or key events coming up. Thanks for reminding me, Raj. It's always great to have you. It is. I will have to map that out, the huge rising wedge pattern, and see how that plays out. Let's just go through this and I'll get to the final questions. Then I'm wrapping it up. I've been working literally all weekend, and I need to unwind for a couple hours before the futures open. It's not even that long. Monday earnings. What do we have here? We'll take a look at. Let me switch here again. I got to switch cameras. There we go. Logitech. I will be watching Philips, of course. IBM, but IBM's been losing its luster over a few years. Tuesday, I'm definitely keeping an eye on Johnson & Johnson with healthcare. Etf Sector shifted very, very bearish. Microsoft, definitely. That's going to be a very important one. Capital One, I'll keep an eye on with consumer. American Express, I'll keep an eye on with consumer. Verizon, I'm definitely watching because communications ETF is so weak right now. Looking for a slight bounce, but then another rollover in that. Wednesday, Boeing, definitely the company that shall not be named right here. Definitely Intel, definitely We'll look at NASDAQ earnings. Let's see. I'll peek in Progressive, but we have Seagate also as a secondary. Then looking at Thursday, we have MasterCard and Apple, very important. Robinhood, just because so many people follow it. Visa, very, very important. McDonald's, very, very important, especially from the consumer aspect. And I'll take a look at Southwest because of the airlines. And Friday, definitely looking at Chevron because oil's been so strong. Phillips 66 is another great play to watch for on Friday. That's the earnings. Where was my... here's what we have coming up next week in terms of potentially market moving. We have the PMI, which I will keep a look going at tomorrow morning. Consumer confidence, definitely looking at on Tuesday. Let's see. Definitely new home sales, especially with the home sector ETF rolling over strong. And then, of course, Wednesday we have FOMC and crude oil, which is because of commodities right now. Thursday, going to look at the advanced GDP stuff, durable goods orders, both core and just a standard number, unemployment claims. So besides the Fed, you have a lot of key numbers coming out. And then Friday, core PCE price index is going to be very interesting. Personal income and personal spending, because of the consumer starting to potentially roll over, will be important. And then U.S. consumer sentiment will be important. So beyond Fed this week, there's lots of things that could potentially move the markets. Hi, Mike. Gap question. Looking at HPQ, can you use a 62.5% retracement on a daily close as a gap trade signal, or is it too far out at this point? Looking at the on a daily close. See, your retracements would be here. I mean, HPQ already did that double top, completed the double top. The 62.5 would be below, take this off, would be below the gap fill. So that's the key area. I mean, unless you're using this run up, which is already closed below. HPQ longer term, I'm going to target that gap fill and the 200 area. So right in here, longer term. I'm just, again, watching for bounces. This is a weak close into an advanced clear path. So over a multi-week period, I'm expecting the gap fill. And here's your day. I mean, your daily close into that. Your daily, you have a bearish mode with the rotation zone. And weekly, you might find some support down at 33.82. But if you did, I just watch for another rollover play in that. I was not using the wicks on the candles. I was using the bodies. There are certain things you use the bodies for. There are certain things you use the wicks for. For retracements and harmonic projections, you use the wicks. You are welcome, Benjamin. Why don't you say the name? Because the moment I say the name, my videos get limited monetization. Now, I don't mind limited monetization for people who actively support the channel, but a lot of people just tune in and the ads help pay for a little, maybe minor, but when it gets demonetized or limited monetization, then I have to put in a request for a review at YouTube. The problem is when they get back with saying, okay, there's nothing wrong with your video, it's suitable for all advertisers. Who's watching if I say the name of the video I do every day, the company shall not be named? If I record one on a Monday, who's watching it that Friday? Unless to go back and check a level. Nobody. Because it's timely. So by the time it gets remonetized, it's done. So that's why I don't name it. From the don't use the close from the gap on that big that's more for intraday stuff. And for short term, that's too stale at that point, Michael. That should answer your question. But that's what I'm watching for. I'm watching for again, a bounce like in a lot of these techs potentially. They have to prove themselves. It's not just buy it because it's down. That would be, this is a falling knife, and again, you might get the bounce, and then it slices your hand off. So that's why you don't just want to just, oh, it's oversold, I'm going to buy it. With that, okay, everyone, thank you. Not seeing any more questions right now. So let's see how this week goes. I'll be doing market overviews. Everything be normal. I mean, unless something catastrophic happens, I'll be doing market overviews every day, Monday through Thursday, and then again on Sunday. And so we can see if we do get that bounce, how substantial the bounce is, and maybe do some more upside potential projections after it starts getting a little upside momentum. Remember, please check out the videos that were going up today earlier, that the gamma video. I think it's important even if you don't trade options, because it's important to understand on expiration days, especially monthly expiration days, how the markets can move based off of whether you're in positive or negative gamma territory, and that can help you position yourself correctly. And if you trade the futures, it helps a lot. Also, check out the Etf Sector video. And if you're new here, please do, where's my little button? I lost my button. Please do consider subscribing, ringing the bell, hitting the like button. And if you're a longer term person who gets value out of this, please do consider some donations to the channel so I can keep making improvements to the equipment and to help compensate for me for my time. Talk to everyone later. Bye for now.